redlining technically ended, the manifestations of those policies did not end. So you can still see it today in neighborhoods where there's no racially restrictive covenants that are enforceable, there's no red line, but you oftentimes see the same type of socioeconomic and racial patterns in various cities and municipalities all across the country that formerly had been redlined.
And there's no mistake about it. This was an overt practice.
Oh, it was quite overt. The federal and one of the interesting things is, this wasn't during some period in our country's history that was seen as, especially right wing. This was during the New Deal, like FDR. So it was his housing, agency that worked hand in hand, and there were written rules that required there to be racially restrictive covenants. So this, no, this wasn't, hiding in the shadows. This was in black and white. This was federal policy, and this became the policy of various state associations of realtors.
Was this to appease the Southern Democrats at that point, or was it just something that they just thought was smart, good policy?
No, it was based on white supremacy, and it wasn't limited to the South. So there's a very interesting set of projects now in different parts of the country. It's nascent, it's a small number, but they're, for example, with these racially restrictive covenants, they're mapping them. And some of the cities involved in this mapping, Seattle, Washington, that's not Montgomery, Alabama, Minneapolis, Minnesota, and then Richmond, Virginia has done some of this mapping. And then there was a smaller project in the Washington, D.C. But these racially restricted covenants and the redlining were pervasive throughout the country. I lived in Madison, Wisconsin, which is supposed to be, people refer to it as the Berkeley of the Midwest. It's got this progressive reputation. The house I owned in Madison, when I bought it in 2000, I quickly found out in meeting with my lawyer, it had a racially restricted covenant that basically said that I was only entitled to be there in the role of a domestic servant. Interestingly enough, I live in Dallas, Texas now. The homes are built in the same period. So my house in Dallas was built in the same period as our home in Madison. And I just assumed that there was going to be a racially restricted covenant, and there's not. So that's just sometimes it's counterintuitive where people assume that these practices were just in the Deep South. And unfortunately, they were in California, they were in Massachusetts, they were in New York, they were in the South, they were everywhere.
What were the practical implications for somebody, a person of color who wanted to buy a home?
The practical implications of redlining meant that they were going to be locked out of buying a home in the most favored neighborhoods as a practical matter. And then the problem was that they had very constrained options. So you had in the 30s and the 40s and the 50s. I mean, before we got to like the Federal Fair Housing Act in 1968, you had banks that would not provide traditional financing. And part of it was because the mortgages would not be insured by the federal government as a result of redlining. And so what African American families tried to do is try to get any type of financing that they could to acquire a home. But they were kind of dealing in this shadowy market with these kind of exotic financing tools that were pretty much predatory and designed to make sure that they couldn't make their payments. So they were essentially, there's something called an installment land contract, where if you are trying to buy property, you don't have traditional financing, you pay monthly. It's considered rent until the end of the installment land contract, whether it's 15 or 30 years. So if you make it all the way to the end, you've made every payment, you make the final payment, then you actually own. But if you miss any payment, even that final payment, then all of the money you paid is considered rent. And so essentially this scheme was to make the monthly payment so high that it was likely that these families would not be able to sustain it. So a lot of the families would get 2 and 3 jobs. They could sustain it for like 3 years, but then they missed a payment, and then they were evicted, and then it was rinse and repeat, and whoever was the real estate speculator would start again with the new family, prey upon them, kick them out after 2 or 3 years, and just make a tremendous amount of money. So that was, until we had the Fair Housing Act, you had these various schemes that were predicated on the fact that African Americans did not have access to traditional, regular prime mortgages. And unfortunately, what we've seen is, in recent times, is a practice, basically we call it reverse redlining. So this happened in the Great Recession in the early 2000s, where essentially you had major banks and other financial institutions in this country kind of drew a kind of a red line around certain black areas and then approached them and said, oh, we want to help finance your purchase. And what they took advantage of is these documents were lengthy, they were in small type, they were formed, and they were just chock full of these exotic language that essentially was to ensure that these families couldn't maintain their ownership. Maybe there initially was a low interest rate, but then somewhere embedded in the documents it said after a certain period of time, the interest rate on the mortgage could go up considerably to the point that the families would not be able to manage it. And during the Great Recession, as a result of these predatory mortgages, this reverse redlining, there was just a huge number, an epidemic of foreclosures in this country in the black community. And it's estimated that the black families who ended up losing their homes as a result of the foreclosures suffered a couple $100 billion of economic losses. But then even worse than that, there was collateral damage because there were African American homeowners in the neighborhood who, some of them had traditional mortgages, they were sustained, but all of a sudden throughout their neighborhoods, you would have this huge number of homes in foreclosure, they would fall into disrepair, and so they then had the negative collateral effect of reducing the property value of the folks who still had their homes. And it's estimated that that collateral damage was another couple $100 billion.
What's been the impact on the African American community in particular for not being able to buy homes in the 40s and in the 50s and in the 60s, that generational transfer of wealth that did not take place, all that sort of thing?
Yeah, you've both had African Americans deprived of being able to build up generational wealth. And so in the United States, still today, we have a huge black-white racial gap. The typical African American family has somewhere between 10 and 13% of the wealth of the typical white family. That has been kind of enduring. And so you both have this huge gap. And then you've also created people sometimes because of the gap and because of their lack of access to traditional financing, lack of their being able to tap kind of in law legal structures that better ensure that their property is stable and secure. You've had a tremendous amount of property loss because the ownership that exists too often is second-rate ownership. It's in areas that are not desirable, it's in legal structures that are unstable, and unfortunately you've had folks prey upon those communities, resulting in, all told, we're talking, if you kind of add it all up, right, we're talking trillions of dollars of lost wealth. And so it has had a tremendous multi-generational negative impact.